In today's video, I'll be going over episode 2 of my trading 212 dividend portfolio. Just showing how the portfolio's performed over the last week, going over my biggest winners and losers over the last week as well. But obviously, before I get into it, guys, you could smash the subscribe button on the channel. I'd be much appreciated. I want to go to get to 2k subs. And also at the end of this video as well, if you like the content, it has some value, brings some value to you, definitely consider smashing the like button for the YouTube algorithm. Helps boost the channel loads. So as you can see, guys, the portfolio stands at £2,307.16. I'm currently up just under £30 or 1.3%. So there's been a bit more activity, as you can see, over the last week with stocks bought. So that'll be the first thing that I'll go into. So I'll show you my latest orders. So history, then orders. So in this week, I've bought Starbucks one share Verizon, share of J&J, Johnson & Johnson, as well as KO. That was on the 23rd of November. On the 24th of November, I bought 2 shares of 3M, 6 shares of AT&T, 1 share of Colgate, and then a share of Unilever also. And I also received a special dividend from Pfizer, which was for £3.06, my first dividend in this portfolio. So that was well received. So that's just a bit of insight to what I've ordered this week. We'll now take a look at the biggest movers and the biggest fallers. So we'll start off with, it's been quite a good week really, guys. There's not been too much bad performing stocks per se, but we'll take a look at the one that's performed bad, which is Hormel Foods. I am currently down just over 9% with my average cost at £38.64, and you can see the stock is at $46 now. So, or $50 was my average cost. So they had a slightly underwhelming earnings. So their expected earnings per share was 0.45, but the reported earnings came in at 0.43. So the earnings per share missed by 4.47%. We're also down in revenue. They expected a revenue of 2.6 billion, but only reported a 2.4 billion. And the net income, it came into at 203 million, up 1.84% from the last quarter. So main reasons for Hormel Foods struggling in this last, well, not really struggling, but underperforming, was sales down due to impact of the pandemic still. But I do expect this company to recover quite strongly. Maybe it's a good time to buy these while they've dipped. They're still up in the air over 9%, so this is just a blotch on the card as far as I'm concerned. So that is it for the bad stock on the list, guys. So now we'll take a look at the first winner of the week. So AbbVie, in the last week, they're up 5.53%, and in the month, 23.52%. Obviously, again, they had a quite good earnings back in the end of September. Their expected earnings was 2.77 EPS, but reported 2.83. The revenue came in at 12.9 billion, up a massive 52% from the last quarter, with a net income of over 2.31 billion, which was up 22.57%. Big reasons also for AbbVie's shoot up in price, which comes that Warren Buffett, the legendary investor, his company Berkshire Hathaway disclosed a £1.8 billion position in AbbVie. Obviously, that Warren Buffett is obviously one of the greatest investors of all time, and many people have seen that and thought, you know, AbbVie could be an even better buy than they already are. But what I noticed is they are over the $100 mark now. But in the past few years, anytime they seem to go up to the $100 mark, they sort of seem to bottle it and go back down. So they've done it a few times. So they've done it last year and then went back down. But I think this could be a sign they could be set to grow even further than what they already are. We'll just have to wait and see. Especially with Warren Buffett putting that sort of cash into them, it's obviously, as well as the profits they've made, it's good standing for the future for AbbVie. So I feel like it could be a really good buy in the future for myself. Obviously, do your own research as I've done. Also, they've increased the quarterly dividend payment, which is obviously a good sign for investors as well. Previously, they were paying 118 cents per share, and now, as from the next dividend, which I think it goes into ex-dividend date on January the 14th, I'm not too sure about that, I know it's January. The next dividend will be 130 cents per share. So, again, I've got 2 shares at the moment, so I'm going to try and increase that and get back up to the 6 shares that I was at in my old portfolio. So my average cost is £73 or $97. Which is good, it's below the current share price. So that is the first stock on the list. So the next one we'll take a look at is BP. BP have been performing well over the last month, really, up 31%. They're at the highest they've been at since a long time now. So the last 3 months, so back in August, September time, £2.63 a share now. So I think one of the main reasons with BP going up, people having a bit more faith, putting the money back into this company. Obviously the supply and demand is increasing again. They're also going over more towards the renewables, which I think people have a lot of faith in them in. I myself do also. Obviously the news that UK are banning diesel and petrol cars by the year 2030. That could have also affected the share price, but I do think people are just having a bit more faith back in BP. So yeah, I'm up 11.97%, although that isn't a true accurate representation of how much I'm actually up, as I was down around 40% on the old portfolio. So just sort of trying to get back up to that sort of level. Also, news about the vaccination obviously helps the stock market in general, so that could also be a deciding factor in share price going up with BP. So the next stock, which is up quite a bit in the last week, which is Main Street Capital. They're up 4% in the last week and 8% for the month. So I own 2 shares, and my return on the investment so far is just under 9%, with an average cost at $29 or £22.35, which is below the current share price, which is good. Slightly standard earnings performance, which was the earnings per share expected was 0.47, and a slight decrease as they reported up 0.46 earnings per share, with an expected revenue of 51.59 billion, but a reported revenue of 51.95. So it's like swap the numbers around. If I said that the right way then. With a net income of 78.2 million, which is up a massive 130%. So yeah, good monthly dividend paying stock as well. So it's always nice when you have a bit of return on investment in these sort of companies. So that's the REITs. So next is another REIT, which is Store Capital. We're up 6.6% in the last week and just under 20% for the month. I'm up almost 20% on my investment for the 2 shares that I own. My average cost is $27.38 or £21.09. So November rent collections for Store Capital have been up a massive amount of 9%, meaning they've received 90% of the contractual rent and interest for the month of November. So that's Store Capital again, and I think these pay quarterly, but obviously they are a REIT. So they had an earnings per share of 0.22, which was the same as expected, with a revenue increase, of 3 million, as they expected 172 million in revenue, but reported 175 million. So that's Store Capital. There's a couple other stocks just wanted to mention are up. So we've got Cisco, we're up 10% in the last month, but not really moved much in the last week, which is why they didn't make the cut for the week's worth. Also, we've got Royal Bank of Canada, who are also up 4% in the last week and 30% in the last month. They've also increased their dividend as well for the next time. So Canadian banks really good for dividend paying stocks. So my average cost with Royal Bank of Canada is $76.43 and £57.91 if you're in the UK. So yeah guys, I also wanted to share with you, obviously I managed to time the market well with Unilever. So I did buy, let's just go to history of Unilever. I bought 1 share on the 24th of November for £43.77. One of the rare times you can buy the time the market. Unfortunately I didn't buy more. So when I bought them, they're around £43, so now gone up to £45. Bit of a dip today, but not too much to worry about. So yeah, that was just a basic insight to what stocks have done well this week, guys. I'll probably do an overview of the whole portfolio maybe once every month or so. I'll go for every single stock and show my return on investments. But yeah, I'll be investing more of the spare cash I've got. So I've got £1,523 in spare cash, which is ready to be invested. So yeah, obviously up a little bit, which is good, but you just want to start seeing those dividends rolling from big companies such as AbbVie, Johnson & Johnson, Colgate, 3M, as well as the monthly paying REITs. Hopefully we start to see the portfolio take off with reinvestments of dividends and also regular investments from my cash flow. So that is it for today's video, guys. Let me know what you think of the stocks and how they performed. Also leave a comment and a like to help boost my channel, and also subscribe if you haven't. So on that note, I'm going to leave you to it today, guys. Take care.